Ever looked at a financial chart and just felt lost? Like you're trying to read some kind of secret code? Well, you're not alone. But those little red and green bars, they're not random at all. They're actually telling a story about the constant battle between buyers and sellers. And in this explainer, we're going to teach you exactly how to read that story.
And that is the power we're talking about. The ability to look at a chart, spot one of these specific patterns, and actually anticipate a huge move. This isn't about having a crystal ball, not at all. It's about learning to recognize the signals that the market is already giving you.
So that's the big question, right? At its core, every chart is just a visual record of that fight between the bulls and the bears, the buyers and sellers. By understanding just a few key patterns, you can start to see who's winning that fight, and more importantly, where the price might be headed next. All right, let's dive right in.
First up, let's talk about the heavy hitters, reversal patterns. These are the big signals that tell you a trend might be running out of gas and is getting ready to flip the other way. Spotting these can be a real game changer.
The engulfing candle is honestly one of the most powerful reversal signals out there. It's all about size and pure dominance. I mean, when one candle is so big that it completely swallows the one before it, that's a loud and clear statement that the momentum has suddenly and very forcefully shifted.
And here you can see the two sides of that coin. A bullish engulfing happens when a big green candle swallows a smaller red one, usually at the bottom of a downtrend. It's like the buyers just stepped in and said, all right, enough is enough. The bearish engulfing is the exact opposite. A huge red candle at the top of an uptrend, showing sellers have just slammed on the brakes and taken control.
Okay, so next up we have the doji. Now, if the engulfing candle was a shout, the doji is more like a pause, a moment of total indecision. The price opens and closes at pretty much the exact same level. It means neither the buyers nor the sellers could win the fight during that period. It's a stalemate, and stalemates often happen right before a big change in direction.
And while there are a few different flavors of doji, they all basically tell a similar story. The long-legged doji just shows that tug-of-war was even more frantic. A dragonfly is bullish because you can see buyers defended the low price, and the gravestone is bearish because sellers defended the high price. But the common thread? The current trend is losing its steam.
This is a fantastic illustration of two powerful patterns that are perfect mirror images. The hammer shows that sellers tried to push the price way down, but the buyers stormed back in and closed it near the top. That's a super bullish sign. The shooting star? Exactly the opposite. Buyers pushed it up, but sellers slapped it right back down. A classic bearish signal.
Now, the tweezer pattern is all about confirmation. Think about it. When you see two candles in a row try to break a low point and get rejected, creating those two little tweezer bottom wicks, it's a really strong sign that a support level is holding firm. The market tested that level twice, and twice it failed. The same thing goes for tweezer tops at a resistance level.
All right, so reversals are super exciting. But you know what? Sometimes the best money is made by knowing when a trend is just going to keep on trucking. That's where continuation patterns come into play. Let's see how this works.
I want you to picture the market just chopping around sideways, quiet, boring, not much going on. Then all of a sudden, bam, a massive candle appears, totally dwarfing everything that came before it. That, my friends, is a momentum candle. It's a sudden explosion of energy, and it's telling you the quiet time is over and a strong new trend has probably just started.
And this analogy is just perfect. When a price breaks out of one of those sideways ranges, it often triggers a whole bunch of stop-loss orders from people who were betting it would go the other way. And all those orders getting hit, it just adds more power, more fuel to the breakout, pushing the price even further and faster.
And then you have the Marubozu. This candle is a sign of absolute, total conviction. The key here is the complete lack of wicks. A green, bullish Marubozu means buyers were in 100% control from the second it opened to the second it closed. A red, bearish one means sellers were in total command. It's one of the strongest continuation signals you'll ever see.
Okay, so after all that, it's really easy to get excited and think you've found a magic formula. But we need to take a step back and talk about a very important dose of reality when it comes to reading these charts. Let me just say that one more time, because it is that important. Patterns are not promises. They're about probabilities. They give you an edge, an insight into what is likely to happen. But they are never, ever a guarantee.
And this right here just hits the nail on the head. You have to think of these patterns as clues in a detective story. They're powerful hints that can point you in the right direction, but they are absolutely not the whole story.
You see, the best traders use these patterns as just one piece of a much bigger puzzle.
A bullish engulfing pattern by itself? Okay, that's interesting. But a bullish engulfing pattern that happens right on top of a major, proven support level with another indicator also pointing up? Now you're talking. Context is everything.
Okay, I know what some of you might be thinking right now. Man, this is a lot of patterns to remember and try to spot on a live chart. And yeah, it can feel a little overwhelming at first. But here's the really good news. You don't actually have to do all the heavy lifting yourself. Technology is here to help. You don't need to have every single variation perfectly memorized because your charting software can actually find them for you.
It's honestly so simple. On a platform like TradingView, you literally just go to the Indicators tab, type in the name of the pattern you're looking for, click it, and boom, the platform will automatically flag every single time that pattern has appeared on your chart. It lets you focus on the actual analysis and strategy instead of just hunting for shape.
And this brings us to one final, really critical question. You've learned the patterns, you know how to find them. But what happens when you see a picture-perfect bullish engulfing candle and then the price just tanks anyway? These are what we call false breakouts. And learning how to handle them, well, that's the next big step on your trading journey.